In this video, we're going to do a quick long-term technical analysis. Take a look at the Bitcoin chart in its 4-hour time frame. Notice how we continue to emphasize the importance of this trend line, this price level, the $92,000 mark. If you pay attention and compare it with the rest of the crypto assets, you'll see how other cryptocurrencies are also in crucial areas. For example, look at Ethereum. We're really close to this key defensive zone. The same goes for Solana. We're also approaching a critical structure for this asset. All of this leads us to believe we're in a make or break moment for the crypto market. And if you look at Cardano, it's a similar story. It's near a major defensive zone where, as you can see, there's virtually nothing below this level. What we see with Cardano is also reflected across other assets. But let's start by analyzing the traditional market because we're noticing key events that demand our attention. Take the daily chart of the SHIB 500, for example. Since its recent all-time high, it has dropped 5.65% in just 26 days. This SHIB 500 decline isn't random. It stems from a rising wedge that has now broken down and appears to be in free fall. While there was a structure here before, we've updated our perspective and taken a much more macro view. Ultimately, this wedge could be much larger than we initially thought. That's why its breakdown, or more precisely, the level where it might settle and where decisions could be made, is likely a bit lower. We've identified that level at $5,737, which is where the structure lies. What do I mean by this? First, Trump won the elections, and the immediate reaction in the stock market was an upward rally. But shortly after, the bullish party ended, and we've been experiencing this 5% decline I mentioned earlier. What we can take from this is that Trump's victory is nothing more than noise. It's irrelevant for short-term analysis. So let's focus on the $5,735 level in the SHIB 500. As long as this level isn't broken, we can say the bullish momentum continues. At the same time, we acknowledge there's room for a pullback if the market decides to drop. And even if that happens, it wouldn't be the end of the world. Now, shifting to the Nasdaq, we've done a similar analysis. The rising wedge here is harder to define, but we've drawn it. To simplify, we've identified a defensive zone that could potentially act like the SHIB 500 trend line, marking a boundary that allows for some volatility. As long as this zone holds, we can remain optimistic. For the Nasdaq, we're prepared to tolerate a potential drop. If it decides to fall, as long as this structure isn't broken, we'll maintain a positive outlook. However, if the structure is tested, there's always the chance for a trap scenario where the market reverses sharply. This tolerable decline might not even be necessary, something we can't predict with certainty. But we do know that by understanding how smart money moves through these structures, we can confidently say that as long as this defensive zone holds, there's no reason to abandon a positive perspective. Now take a look at MicroStrategy. This is absolutely wild. Let's switch to the 4-hour time frame. And here we're observing something fascinating. The price level we've been emphasizing as critical is none other than $325. It's a level that recently served to create what we could call a trap. Honestly, if we could ask for a belated gift from the 3 wise men, we'd ask them to let the price move upwards after this test. This narrative for MicroStrategy could project a very positive short and medium-term outlook for the crypto ecosystem. So let's hope for the best. However, we'll have to see if the 3 wise men are on our side or if they decide to tear down this structure entirely. If that happens, we'll need to analyze and update the structures accordingly. If we want to remain optimistic about the short and medium term, particularly the short term with MicroStrategy, and by extension with cryptocurrencies due to their strong correlation, we can't afford for MicroStrategy to break below this level again. Once is tolerable, but twice is unacceptable. The takeaway is simple. If MicroStrategy holds above this price level, we can remain very positive about the short term, not just for MicroStrategy, but for the crypto ecosystem as a whole. And now, of course, we're going to talk about Bitcoin and other cryptocurrencies. But first,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Now, let's talk about the importance of this key Bitcoin level, which is sitting around $91,958. But before diving into that, let's take a moment to discuss what's happening, or rather what's not happening with Ethereum and other altcoins. On a macro level, let's simplify by looking at the daily time frame. Notice how this chart shows just one structure drawn. We've marked a defensive zone around $3,000 for Ethereum. Based on the potential volatility in the market and cross-analysis with traditional assets, we believe that even if these assets experience a slight drop, it doesn't necessarily mean the end of the world. This brings us back to MicroStrategy. Often what happens is that a situation like this forces us to adjust the structure as it no longer aligns with what's unfolding. If that occurs, we would begin searching for new structures to explain the previous messiness and provide insights into future behavior. This concept might seem a bit advanced, but I'm sure some of you understand it. If you do, make sure to subscribe to this channel and let us know. As for Ethereum, notice how there's room for a potential drop. As I mentioned, this wouldn't necessarily be catastrophic, but it's clear we're starting to play with fire. While it's true that the critical structure hasn't been lost yet, it's teetering on the edge. If it doesn't recover quickly, an immediate positive projection becomes unlikely. That said, given the current state of things, there's no need to change our perspective. We haven't seen any key structures, crypto or traditional, break to the point of signaling dark times ahead. For now, we're just skating on thin ice, but it's not the end of the game. But if that doesn't materialize, the trend could continue. And we can see this clearly on the BNB's chart. Binance Coin, though with a completely different structure. In previous videos, we talked about the complex corrective pattern, whether this was a bearish impulse, a W, weak Y, and a Z that hadn't broken its trend line yet, which allowed it to continue. All of that has already been explained, but now our focus shifts to tracking this bullish trend. That previous narrative was useful at the time, but it's behind us. Now, as we all know, we're in a bullish Z wave. Let's focus on the structure and explore whether we're in a reaccumulation phase with a clear bullish evolution. I want to identify where that structure is, if it exists, that may have generated a black swan event. Looking at alpha angles, we've identified a structure where smart money has clearly defined the key level separating good from bad. Here's where we find the black swan. This is the breakout justifying the current rally. That said, we analyze it to understand. If BNB or other crypto assets decide to pull back, we want to identify the levels smart money might defend in the future. Look at this, it's fascinating. BNB might decide to fall, though we can't say for sure. If it does, the price might revisit this structure, the origin of the breakout, as long as it doesn't break below roughly $592. Keeping in mind, this is a dynamic structure with some increment, we can remain optimistic. While this structure holds, there's no reason to change the positive outlook. And just like I mentioned earlier, I'm not trying to map out the perfect pattern and tell you it will drop and then rise. Instead, what we're saying here is that as long as this level isn't broken to the downside from a macro and long-term perspective, we can remain positive. We also need to appreciate this asset for offering us such high-quality information in such a clear way. Cardano, in some ways, reminds me of MicroStrategy, though there are clear differences. As you know, Cardano has gone through a significant awakening, a complete accumulation process that we've been tracking here in the Crypto Insight videos. It's no surprise that we've recently come out of a major bullish rally, a strong impulse that is now testing this defensive zone. But it seems the Border Patrol is being a bit stubborn, not letting it pass right away. As we know, in a hypothetical positive scenario, the broader crypto ecosystem currently be in a consolidation phase. While it's true that markets are inefficient, it wouldn't make sense to see a market rise infinitely without correction. Humans simply aren't capable of creating a perpetual market with those characteristics, not within a single asset, of course. Now, we are familiar with American indices, which require a certain degree of economic engineering to maintain a positive average annual appreciation in the long term. But that's a different story. Here, we're talking about an individual asset, one that stands on its own. This is why it would be completely unrealistic to expect cryptocurrencies to rise perpetually. The psychology of humans, both individually and collectively, simply isn't designed, through independent work or otherwise, to make such a phenomenon even remotely possible. That's why we see these types of pauses. And with Cardano, what we're analyzing is where this structure might tell us, hey, Cardano is coming off a very strong and aggressive rally. We've entered a pause. Let's see if it's just a mild one. Why? Because if this defensive zone around $0.85 doesn't break decisively to the downside, the message we might be getting is that a significant bullish breakout could happen very soon. This isn't a definitive statement, but rather an understanding of the implications of this structure holding its ground and not breaking to the downside. That's why it's crucial to closely monitor Cardano's structure. We need to recognize that if the market chooses to, it could drop further or even create false breakdowns, and it wouldn't be the end of the world. In summary, the conclusion is that both the traditional market and cryptocurrencies are showing bullish directionality. However, they are playing with fire, testing nearby structures that will ultimately determine whether the bullish trend continues. If these structures hold and don't break to the downside, the rally remains intact. This is a simplified and condensed way to understand both the traditional market and crypto markets. Of course, I've detailed all of this in depth throughout this video. If you found this advanced technical analysis interesting, let me know in the comments. But don't forget to like the video, subscribe to the channel, and hit the notification bell so YouTube alerts you about future uploads. Good luck with your trades, and see you next time.